Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, co-founders, executives, entrepreneurs, artists, musicians, you name it, all across the world of crypto and blockchain globally. And today I have another amazing guest. I'm really looking forward to this interview. And his name is Jesper Johansen. He's the founder and CEO of Northstake. Jesper, welcome.
Thank you so much, Jamil. Happy to be here.
Happy to have you. Pleasure, honor. So let's kick things off and ask you the first question is, what is your background, and is it a logical background for what you're doing now?
So Jamil, before I founded Northstake, I spent, I think, more than a decade in technology and management consulting, most recently with Accenture Strategy, and before that Deloitte, monitor Deloitte, and prior to that technology consulting in Denmark and with a top firm. And throughout my career in consulting, I've been working on a variety of use cases that uses or aim to use blockchain technology. So in some sense, I've been sitting on the advisory side for large corporates and assessing the viability and also the timelines for when this amazing technology was mature enough for sort of corporate enterprise adoption. And one thing that was sort of always pushed to the side were crypto, right? We sort of always worked on the premise that, you know, these things will work, and the crypto thing we have to sort out when we get there. So, but sort of adjacent to my day job in consulting, I fell down the rabbit hole of Ethereum and Bitcoin back in, I guess, 2017, early 2017, where I also acquired my first Ethereum and Bitcoin, and still have it. Yeah, so that was sort of my entry into crypto, almost like sort of the you know, work a daytime job, and then outside of working hours, looking into what is this crypto thing, what is Ethereum, what is the utility of Ethereum and Bitcoin, why is that the number one crypto asset, so on and so forth. So yeah, that's sort of the quick background and sort of entry into crypto.
Excellent. So I have a follow-up there quickly. You were working at Accenture and you discovered Bitcoin and Ethereum. And I know at the time in 2017, Accenture had built a blockchain that was editable as opposed to Bitcoin and Ethereum. And I just want to get what your thoughts were then.
Yeah, I mean, in 2017, I was actually working at Novo Nordisk IT and Deloitte. However, there was a lot of corporations, enterprises who were looking into building consortiums that would sort of bring industry leaders in whatever industry together to collaborate on how to leverage open permissionless networks. And the issue, I think, was not to identify and work on the use cases that you would build on top of this technology. The issue quickly became, which network should it be? And back then, I don't think that, you know, our assessments back then were that Ethereum weren't mature enough to sort of take on that level of sort of a whole industry moving into Ethereum. So what alternatives were there, right? And then you started looking into permissioned, blockchain, distributed ledger technologies, and I think IBM was at the forefront here. Accenture also had play, but I think the commonalities between these investments, these plays from these large technology companies, were that I think they failed to understand what the underlying incentive mechanism, and therefore the business model. What is that supposed to be if you are, let's say, IBM or Accenture, right? Thinking in terms of building technologies, licensing them, taking fees for implementation, consulting, and operations. So in that sense, you could say the technology sort of innately just worked against that sort of big corporate play, right? Because that has to be a centralized permission blockchain, and there will be, I guess, room for permissions, centralized blockchains, but as a technology, but it will not be as ubiquitous, I guess, as a permissionless decentralized blockchain. And I think we've seen this with just looking at the internet as of today. Permission versions of the internet simply do not work. So I think there's a lot of sort of commonalities or similarities to what we're seeing in development of the early internet.
That's a great comparison, and we'll get into it a little bit more. I have some follow-ups in that area. I do want to first find out, though, what Northstake is all about and how you help institutions gain a stake in the future technology economies.
Yeah, so thank you for that question. Northstake is a regulated virtual asset service provider, and we focus primarily on building regulatory compliant staking products for institutional investors. Now, there is a lot of, I think a lot of talk about what is regulatory compliance within crypto, what is the investment case for an institutional investor, why should they invest, and then subsequently, how will they then manage this investment? And I think the reason why we founded Northstake and sort of our core thesis is that if you believe in the future of Web3, all of the economies that will be built on Web3, similarly to Web2 gave us e-commerce, for instance, a huge economy. Now, if you believe that Web3 can build new economies akin to sort of e-commerce, how would you as an investor then gain exposure to those economies, right? And we believe that you should be holding a crypto asset in some shape or form, and then that's where all of the sort of issues start. Both, because there's regulatory uncertainty, especially in the US, about this. What is the nature of this investment? What is your just legal rights if you are a service provider in this space? There's a lot of different issues that sort of pile on top of each other of legal, financial, regulatory, operational, security issues, right, that you have to think about if you're an institutional investor. And this is what Northstake focuses on, right? We build products that incorporates all of these aspects or addresses all of these issues so that you as an institutional investor can gain long-term exposure towards crypto and towards these Web3 economies. And the reason why that is by definition or by its virtue a staking product is that a sort of buy and hold strategy in crypto is a staking product. No rational investor would leave the staking yield on the table by simply just holding the asset. If it were Ethereum, for instance, right? You would need to get that yield. Otherwise, you would be just losing the staking rewards, the values, the APY year on year for the duration of your investment. And so sort of I think at its center what it is that we do at Northstake. So we build those products that allows institutional investors to allocate in a secure and simple way. Because let's face it, many of these investors, crypto is not their main sort of precision strategy. It might make up less than 0.1% of their portfolio if they're a very large investor, and maybe less than 1% if they're a small investor. And we like to say that they have 99% other things on their balance sheet that they sort of either care more about or are more focused on, right? Of course, you have your crypto VC, crypto investment, crypto hedge fund type clients and players out there as well. But and we cater to those type of clients as well. But we firmly believe in sort of our mainstream adoption of crypto as an investable asset class for sort of broadly for institutional investors.
Awesome. So, and you're in Denmark, so you're now under the MiCA rules and regulations, right? So it's important to be regulatory compliant, right?
Exactly. This has been one of our key focus areas. A part of the team that is Northstake have helped from an industry perspective in Europe provide the industry input to the legislative process of creating the MiCA bill. We continue to engage with regulators both at the EU level and also domestically on how to adopt crypto regulation and also how future iterations of MiCA potentially would look like. And yes, we work closely with regulators on this topic.
Excellent. So I've been noticing something. I've been noticing a couple things in the market right now. I want to get your take on this. And people say this, and I don't know. True or false? Are we currently in an institutional bull market while the rest of the crypto is in like either a bear market, crypto winter, or a crab market where things are going sideways? And if so, then why or why not?
I think we're still sort of seeing the tail end of a bear market, and I mean, Ethereum's up more than 54% this year to date. I think we see similar type numbers with Bitcoin, and I think all of the announcements dropping right now with a new spot ETF, Bitcoin ETF. Sorry. All of the news that we're seeing with BlackRock launching or applying for a spot Bitcoin ETF, Citadel, Charles Schwab, and Fidelity investing in EDX. Deutsche Bank have applied for a crypto custody license in Germany, I think. I mean, these are all signals that would indicate that we are heading into a bull market. But for me, at least, I still would like to see the allocations, right? I would like to see the demand side really pushing through. And in that sense, I might be a bit conservative, or I wouldn't say less optimistic, but at least I want to see, show me the money, right? I want to see, stop talking about it, stop announcing it, just start allocating to crypto, because it's critically important, I think, for institutional investors to obviously not forgo on their side, not forgo an investment opportunity, which is going to be seminal in hindsight. And on the other hand, from a community perspective, in order for crypto and blockchain technologies to really hit that next level of adoption, you need institutional capital to help bring in the value, appreciation, the price action that we'll see that would incentivize these communities to continue building and expand their ecosystems and sort of accelerate that adoption curve, right? So I'm cautiously optimistic that we are heading towards a bull market, but I also recognize that we're in a situation where it could go either way right now.
All right, so that's a good point. Watch the allocation, right? And and not just the words. It's good. It's good. I agree with you. So you did mention accelerating the adoption curve, right? So institutions should be and could be critical and crucial for unlocking mass adoption for Web3 innovation, right? And democratizing the future for everybody. But this concept of democratizing the future for everybody, doesn't that go contrary to the primary aim of a corporation, which is to maximize shareholder wealth for just the shareholders? How do you bridge that dichotomy, or that those two things? To me, they just sound opposite.
That in order for adoption to occur, we need to travel on an accelerated path, and institutional adoption of crypto assets will do that, because it will bring in a lot of capital into these blockchain ecosystems that will help them accelerate the growth path that they are on. And the use cases, the economies that they're building on these blockchains are aimed at democratizing or decentralizing various aspects of sort of what we call future Web3 economies, whether that's decentralized finance, whether that's NFTs or tokenization, real world assets, these kind of things. Now, the interesting piece, and so the second leg of the question is that, does this concept go against sort of a primary aim of corporations, which is to sort of produce shareholder value? And I think if you think about it from an institutional investor's perspective, they will be looking at an investment opportunity. Let's say, what would a liquid market of tokenized real world assets look like, right, in the future? There are certainly a lot of economic incentives to do so, in order to take very large assets and breaking them up into smaller bits and making them more liquid than they are today. Everybody sort of buy into that. But how would you then do that? And who's going to own the infrastructure and the sort of the ecosystem of service providers that would enable this? And if I'm an institutional investor, I'm looking at it, I'm assessing the investment opportunity here, and that is done through the lens of creating or maximizing shareholder value. And I would be looking at and assessing this investment opportunity to what I can get elsewhere. What is the opportunity cost of making this investment? But the fundamental primitive that creates the value in this investment is democratization or decentralization, or sort of making use of a technology which is founded on the core premise that it needs to be decentralized, and you need to have you need to democratize the access to, let's say in this case, real world assets, making those available to you and me and everybody else, and not just large institutional corporates. So Northstake we don't necessarily have sort of a dog in that fight, if I can say that. We monitor this, but we have sort of a very pragmatic approach, because we sit on the institutional investor side, where we say, you don't know how to make this investment. You don't know how to manage this investment. You don't know how to long-term secure this investment. And the reason why I can say that is because they don't want to understand this, right? They rely, as they do in many other asset classes, on third parties that they can counterparty assess, and then they can partner with in order to make the investments that they need in order to successfully execute their strategy. So obviously, we're interested in ensuring that the blockchain communities and sort of crypto communities see as much inflow as possible, because it sort of help the price action long term, which is in everybody's interest. I hope that sort of answered the question.
It does. It does. And it brings me to a couple other questions. And you said opportunity costs, and and you mentioned securely, right? So I think that one of the key things here is to how do they know they can trust their investment, something like that. Like, how can enterprise investors gain access to like fully compliant, KYC, AML services that they can trust in the crypto industry safely and securely, right? How can they do that?
That's a great question, right? And this is what sort of unfortunately flies in the face of all of our, the crypto native people who, why would we need KYC? Why would we need, to know who we're dealing with? And this is where we are very pragmatic, in the sense where we say, in order for there to be mass adoption of blockchain technology and crypto as an asset class, then crypto has to conform to the rules and regulations and laws that exists and will be in the future, rather than the world try to sort of, become fully decentralized. Although I know that is sort of a dream for many. We don't think that is necessarily realistic. To put that out there. So why is KYC and AML important? Well, institutional investors are bound by mandates in on how they allocate investments. Some of the allocations are actually, funds that is managed on behalf of, you and me, pension funds, for instance, insurance companies, so on and so forth. I mean, so we need to think about, okay, what are the sort of general requirements that they have in order to make an investment into any sort of investment or any sort of asset class, right? And obviously KYC AML is on, it's the first sort of hygiene factor that needs to be ticked off, but it's not the only one. You need to be able to withstand thorough counterparty assessments. Who's your owner? What is your risk management structure, policy, framework? Who have you been subject to third-party audits? What have those audits found? So on and so forth, right? So regulatory compliance goes beyond just KYC and AML, and in the future in Europe, it also would entail having a crypto asset service provider license. This is sort of the direct implication of MiCA, marketing crypto assets, where there will be sort of clear rules of the road for industry, for the entire industry, whether you're an investor or you are a service provider in the space. So, and there are other legal frameworks that apply as well. Travel rule will be implemented soon, and the only way that you can comfortably say that you are in compliance with these regulatory frameworks and laws is that, sort of from an institution perspective, is that you have a counterparty that you can assess, right? i.e., you need a centralized counterparty to partner with. And institutional investors find it very hard to counterparty assess protocols, smart contracts, decentralized autonomous organizations. I like to say that they need someone that they can sue. And if that is difficult or challenging, then they won't necessarily go for it. So a bridge for institutional investors into crypto as an asset class will happen through centralized entities. And here we see I think a big unmet need not only in Europe, but especially in the US as well, for how to sort of guide not the BlackRocks and Fidelities of this world, but sort of the long tail of institutional investors who would need to have an allocation in crypto in order to be competitive.
I like that. I want to go back to a word you said a little bit earlier, because you said opportunity cost. That was the first one, right? Trust. The second one is staking, right? And you said centralized entities. Hey, we had that. We had FTX, we had Celsius, we had companies that were centralized that had institutional investors making staking rewards and earning interest. And guess what? The banks and the government didn't like that. So at least the ones here, they didn't like that. So it's been an attack vector of the SEC, and it looks like an attack vector, especially against retail. How is thematic staking a viable option for institutional investors, and what other viable products make the institutional investments an attractive option if there is staking involved?
Well, it's a great question, Jamila. There's a lot sort of to unpack in that question, because I think, first of all, FTX, even Coinbase, and also obviously Celsius, not that I'm trying to put those in the same basket, but we need to sort of be clear on what is staking, right? So at Northstake, we do what I think most people like to call protocol level staking or native staking. We run validator nodes, we ring fence those nodes, and we apply a very stringent compliance monitoring system on this, so that we report to the authorities if there are any sort of suspicious activities with regards to these validator nodes. But it also means that from our client's perspective, we can document on chain that their funds have actually been locked in staking on validator nodes, right? In staking positions on validator nodes, as opposed to, let's say, Celsius, or even if I wouldn't go into FTX because that's sort of a fraud show, and maybe Celsius was as well. But I mean, this is not lending and borrowing, right? We do not rehypothecate assets, and I think a lot of the staking that took place sort of prior to Terra Luna blowing up and FTX as well, that was staking sort of rebranded into lending and borrowing, where the underlying business model is fundamentally different, right? Because here you're not creating a yield from the chain, you are taking in client funds and you are repurposing those funds in order to get a yield and then make a spread. And that's not how our business model works, and that's not how native staking works. Now, with regards to sort of the SEC and their interpretation of staking, I hate to say this, but I'm afraid that the buck doesn't stop with Coinbase and Kraken. I mean, there are a lot of US-based staking entities that will be sort of next in line. Block Demon is a large one. Bison Trails, which were acquired by Kraken, I think. Maybe I'm missing something here. Some Stake.US, Bison Trails, which were acquired with some of the largest centralized exchanges, are either part of the lawsuits now, or they will be in the future. As you start from a regulatory perspective, start to unpack what is native staking and what is lending and borrowing, because those are two very different things. And I will say that, if you look at the SEC, I think since the FTX blow up, you've had 130 lawsuits from SEC, which is more than the total amount of lawsuits up until the point of FTX ever, issued by the SEC. So clearly, there's sort of a political motivation to, I know you Americans like to say, regulate by enforcement, which is unfortunately what we're seeing, and I don't expect that to stop until you have sort of a clear legal framework in place that governs how SEC should interpret crypto assets and also staking providers. Here I can say, sort of, to take that into to Europe, MiCA has been underway for more than 5 years. So that's a piece of legislation that has been thoroughly sort of so there's a thorough legal process sitting behind MiCA, and what they've managed to do in that time period have been to sort of adopt into the law itself what are sort of the standard practices of the industry, rather than having sort of the opposite, where you're saying, okay, now we create a new crypto law, let's say in the US, and then we'll have to set legal precedent in order to understand how we interpret this law going forward. And that process is very painful. It takes a lot of time. In Europe, we spent the time wisely to actually adopt a lot of the industry practice into the current MiCA bill. Is it perfect? Far from it. There needs to be additional work, and there will be a MiCA 2 coming up in the future as well. But it sort of gives Europe a head start on this as opposed to the US. Just to the final, just final thoughts on sort of thematic staking as a viable option. I think institutional investors, regardless of how SEC is conducting themselves in the US currently, should pursue pathways to get exposure to crypto assets. And maybe it's easy for sort of a European to say that, but there are viable pathways if you come to Europe, and we can see that Andreessen Horowitz, for instance, have set up shop in the UK now, and there's a UK bill coming in as well on crypto assets as well. So what I'm trying to say is that a lot of these investments are now moving overseas to Europe, and this is sort of a proof point to what I'm saying, that institutional investors will still like to have exposure to crypto assets. It's just not taking place in the US at the moment, and that's sort of the loss for our American friends, I guess.
Well, you have some friends here who definitely want, to see the U.S. advance, and so my next question is, why is the EU going to be successful in the long game in crypto as opposed to the U.S.? Because the U.S. seems to be falling behind. What could our regulators learn from you, other than, starting now instead of 5 years from now, ago, what else can they learn how you guys did it?
So, I mean, I think you need to take a step back. If you look at crypto regulations in the EU, MiCA was initially prompted by the fact that Facebook and Libra wanted to launch, and this caused a lot of concerns in the EU. That, coupled with the fact that, we like to say in Europe that EU's biggest export is regulation. You can take GDPR as a very good example of that. But what it did is that it prompted EU regulators to start working on a comprehensive crypto legal framework. Now, this was sort of fueled by the fact, because Facebook ultimately abandoned their plans of Libra. So you could argue that the sort of immediate threat was gone, but EU regulators continued because they understood that the next sort of wave of innovation on the next iteration of the internet, what we call Web3 today, that needs sort of a clear regulatory boundaries and frameworks in order for investors and builders and ecosystems to thrive, right? And I also believe that EU in many ways sort of felt remiss when we looked at the Web 2 wave, if you like, of companies, Google, Facebook, and the list goes on. None of those companies, except for I think Spotify, actually came out of Europe. The rest was US based and Asia Pac based, but Europe really sort of missed out on the entire Web 2 wave. Now, if we look at Web 3 today, I think some of the analysis that we've done shows that almost half of all of the blockchain development communities, developers, actually sits within the EU region in the world, and that coupled with a sort of a clear regulatory framework and legal definitions of and legal statuses of blockchain projects, crypto asset service providers, and the list goes on. That sort of sets EU on a path for taking the lead on Web3, and unfortunately, US is making that even easier now by what's taking place currently. I would say though that what US regulators must observe is elicit broad industry input, because the reason why MiCA is very is a sort of, from a crypto perspective, a very good piece of legislative work, is that they've incorporated a lot of the industry practices into the legal framework itself. And I could be concerned that regulators would try to adopt a new crypto bill and not in very hastily, and maybe not incorporate the level of collaboration that needs to be with the industry in order to make sure that you have a sort of a comprehensive package that sort of work, because the SEC will continue sort of on interpreting current and future legal frameworks, and I'm afraid we'll sort of continue to on a current path that they are on, right? So that's my 2 cents from sitting across the pond.
Thank you. I want to come across the pond in the next year and go to like places like the French Riviera or the Italian the coast, and like maybe that's a great place to build a Web3 business. I want to touch on one final thing. You guys have at Northstake, you have an OTC and algorithmic trading platform, right? Do you have any concerns like Michael on how your platforms work, or are you guys gonna thrive with what you're doing? And just touch on that.
Yeah, again, I mean, this is, I'm sorry if I sound like a broken record, and it's just not a sort of a sales plug for EU, but MiCA actually gives us, a clear regulatory status as a crypto asset service provider, which, and sort of with that license, and also with the current VASP license that we hold, we are allowed to do any sort of exchange of crypto to crypto or crypto to fiat, or the other way around, as long as we sort of adhere to the AML, applicable AML laws. Soon we also see the travel rule take effect, so we need to have thorough counterparty assessment of whoever transact, but we already have that today, so that's sort of in place already. And with MiCA, in some instances, we have to look at, what type of counterparty are we dealing with, what tokens are we transacting. But other than that, we don't have any sort of concerns in sort of our products, our platform or offerings. Quite the contrary, we look forward to seeing Mika, creating an even more professionalized ecosystem of crypto asset service providers that could take the next $1 billion of institutional capital into crypto.
Sounds great. I love to see the allocation. Like you said before, let's watch the allocation. People should do that. So, you did mention this twice, and I got to just follow up because, for people who don't know, like me, the travel rule. What's that?
So the travel rule is imposed by the Financial Action Task Force, FATF. I'm sure you are aware of that abbreviation. And basically what the travel rule states is a number of thresholds on when you do transact between two counterparties, what level of identification do you need to have between these two counterparties. And it is sort of impressed on both the sender and receiver in this transaction, as well as the transmitter or the counterparty or sort of intermediary sort of execute these transactions to ensure that you know who you are dealing with. So that will take effect as well in 24, I believe. And so there's sort of a host of incoming regulation that crypto as a service providers have to adhere to and observe. Got it.
I always thought for me, the travel rule is if I have crypto on a wallet, if I'm traveling, just put it on the blockchain and delete the wallet and then put it and then restore it after I'm done traveling. So, but yeah, that sounds good. So I want to thank you very much for your time today. This has been very informative and I enjoyed speaking with you. And my final question, is probably the easiest question, is this: how can people find out more information about you, about Northstake, about potentially become a client of yours? How can they do any of that?
Well, the easiest way is to go to northstake.dk and read a little bit about what's going on with Northstake, and reach out to us either directly through Telegram, Twitter, LinkedIn, whatever channel you sort of prefer, direct email, and we're very responsive, and we like to think that we help. So if you have any questions, we're happy to sort of help you out with those questions as well.
Awesome. Thank you very much for your time today.
Thank you, Jamil.